The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. My show airs every Tuesday and Thursday from 3 to 4 Eastern, and tomorrow on Wednesday from 4 to 5 Eastern, I'll be filling in for Tom O'Brien on the Tom O'Brien Show. So just a quick programming note there. The number to use to give me a call is 877-927-6648, 877-927-6648. Don't forget you can get my show on iTunes as a podcast anytime you want, and you can listen to all TFNN programming on your smartphone as well, whether it's an iPhone or Android device. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. As usual, I'll be going over charts on my show, and you can look at those charts right along with me in Tiger TV on the homepage of TFNN.com. Channel 1, the show is live, and the show is archived. If you can't listen live, just tune in to Channel 13 in Tiger TV. All right, turning to the market, first chart we'll look at is the S&P 500. I'm going to refresh the chart here. And let's see what the S&P 500 is doing here. Up 16.5 points today, 1.2% to 1387.59. It is trading up near its session high. Very light volume yesterday on the New York Stock Exchange, below average at 645 million. There's volume is about 10% higher today, which frankly isn't that impressive, but it is on pace to come in higher than Monday. So good day taking shape for the S&P 500. You see a little mini move here over a resistance level. What I want to do is just show you a weekly chart of the S&P 500 because this is pretty interesting. I think the bulls might be happy to see what the weekly chart for the S&P 500 looks like, and here it is. So the S&P 500 since right around the time the NASDAQ followed through on December 20th, which was really the start of this new uptrend, S&P 500 is up about 15% or so. But when you look at a weekly chart here, you can see that the bogey may still be in the early stages of a move here. It just recently, staged a technical breakout. It has run up a lot again since December. So technically, the SPY looks pretty healthy here. Now, when you have one of these U-shaped, cup patterns, it is typical to see a little bit of a shakeout before the high over here is taken out. So that hasn't happened yet, and it's possible we could see a high handle form in the S&P 500. Maybe it pulls down to its 10-week moving average. That would be a reasonable support level at this point, right around that 1261. That's about 120 points below where it is now. Or the S&P 500 might just keep going. But I think the weekly chart for the S&P 500 provides good perspective here. We still could be in a early stages of a move here, and even if we do get a pullback to the 10-week moving average, usually that's just what is a shakeout before a breakout. So good action in the market today. Let's move over, take a look at the NASDAQ Composite. That is also doing well, up pretty much at its session high, up 38 points, 1.3% to 3,021, almost 3022. The NASDAQ since mid-December thereabouts, up about 20%. Listen, the market has come a long way in a short amount of time. 20% gain for the NASDAQ since about December 15th, 15% for the S&P 500. For the NASDAQ right now, you see its 50-day moving average here at 2855. That's only a pullback of 5%, which is completely reasonable and completely in line. You're probably going to see a pullback to that support level at some point, and if it breaks below it, that wouldn't surprise me either. But 50-day could be a good support level for the NASDAQ. What we know right now is the trend is upward until proven otherwise. I've been, hearing some talk in recent days about the distribution day count in Investors Business Daily. They keep track of higher volume declines in the indices, and of course, last week at the beginning of the week, we had some unsettling price and volume action in the major averages, and then Wednesday, Thursday, and Friday, we just turned around and started moving higher again in light volume. I think that price action last week is still noteworthy, but then again, you have to look at a day like today, and a lot of the really good action I'm seeing in some growth stocks as well as positive. So despite some signs of mild professional selling in the major averages, I think going into today we had 6 higher volume declines on the NYSE composite, 4 on the S&P 500, and 3 in the NASDAQ. Yes, that is worth paying attention to, but what mainly counteracts that mild professional selling is the fact that all these big market leaders that have been running since late December are really showing nothing in the way of sell signals. No real signs of distribution in their charts. They're holding above support levels like the 20-day moving average, the 50-day moving average. So market-leading growth stocks really aren't showing anything at all in the way of sell signals. Taking a look at the Fed. The Fed came out with their policy statement right about an hour ago at 2:15 p.m. Eastern. The Fed downplayed the economic recovery. I was a little bit surprised. We've had pretty good job growth the past 3 months. Unemployment rate still stubbornly high, around 8.3%. By and large, economic data in recent weeks and months has been pretty good. Manufacturing, we had retail sales data today that was slightly ahead of expectations, but in the policy statement today, the Fed downplayed the economic recovery. Okay, here are some highlights here. Central bank said that the recent run-up in gas prices will temporarily boost inflation, but it just does not see inflation being a threat, at least in the near term. Fed maintained its Operation Twist program of shifting short-term bonds into longer-dated securities to keep interest rates low. Fed also reiterated its pledge to keep rates low through at least 2014, which to me it's surprising. If the economy continues to create jobs at the rate that it is, I just find it hard to believe that the Fed's going to be able to keep rates low that long. But like I said, they're downplaying the economic recovery. They still think that they see significant downside risk. They see the U.S. economy as expanding moderately, and also acknowledged for the first time, I believe, that global financial market strains have eased. So no real big surprises in the Fed statement. Let's take a look at crude oil. That was up 0.4% today to 106.71 a barrel. Gold for April delivery lost $5.60 or 0.3% to settle at $1,694.20 an ounce. Let's take a look at the GLD, as we normally do when we take a look at gold. Right now, the GLD is down $1.56, almost 1% to 163.51. So GLD still a lot of technical damage done to this ETF over the past several days, and we'll just watch how this one trades going forward. All right, let's check in on the UUP. This is the PowerShares Deutsche Bank U.S. Dollar Index Bullish Fund. That is higher today. Interesting. We've got a higher dollar, higher stock prices. UUP is up 8 cents, about 0.4% to 22.31. And let me just check on the U.S. dollar index. I don't have a live chart of the U.S. dollar index, but that was recently trading about 22 ticks higher to 80.12. Checking in on the euro as well. We've got the dollar stronger today, and the currency shares Euro Trust. This is the FXE, which basically tracks the price of the euro. That is down 80 cents, 0.6% today to $130.11. It's been weak in recent days as well. A bit surprising, as the headlines in Europe seem to be palatable to U.S. markets. You'd think that would have fueled some continued strength in the euro, but that is not the case. So interesting there. Also later today, Federal Reserve bank stress tests. The results should be out Thursday. Big question right now is, will the Fed let banks increase dividends? Will they allow banks to repurchase shares? It's all dependent on how these stress tests go. Let's take a look at shares of Citigroup today. Citigroup, 1 point, good gap up for shares of Citigroup. That stock is outperforming by quite a bit today, up $1.80, 5.25% to 36.09. So Citigroup among the actually a good heavy volume breakout for Citigroup today. J.P. Morgan Chase, we'll check in on that name as well, and shares of J.P. Morgan also up big, up 5.5% to 42.75. There's actually, this used to be a former holding in my Ultimate Growth Stocks model portfolio. I took profits a while back, but this has been another strong performance. Check in on SVB Financial Group. This is the holding company for Silicon Valley Bank up in Silicon Valley, Northern California. It is up 4.3% today to 64.92. They basically they're a provider of commercial banking services with customers in the technology, life sciences fields, venture capital, private equity, and also the premium wine industry. So there's a look at a daily chart of SIVB, and let's go ahead and take a look at a weekly chart here, because this is kind of interesting as well. Let's see, where is Silicon Valley? It's alphabetically. All right, well, doesn't look like I have one saved here. So what I'll do is I'll just pull it up here on a weekly. I'm not going to be able to, well, shoot, I'll fix the moving averages around. Just bear with me here on Tiger TV. We'll put the 10-week moving average and the 40-week moving average up here as well. And, it's really kind of a similar chart to the S&P, where you have a big U-shaped base here, and SVB still in the early stages of a potential breakout here. So this is an interesting name in the financial space. Despite a big price move in recent weeks, it is just in the early stages of clearing its high over here, right around $63 a share, thereabouts. So at $64.91, arguably it is not extended in price. So that's a look at SVB Financial on the NASDAQ, SIVB. Interesting name in the financial space. All right, economic data today. Friends over at Investors Business Daily came out with the first reading on consumer confidence for the month of March. Interestingly enough, ironically, the consumer confidence dropped a little bit in March, down 1.9 points, or 3.8% to 47.5. That's compared to 49.4 in February. Readings in this index above 50 indicate optimism, below 50 indicate pessimism, so we're still in pessimistic territory here. The poll was conducted between March 4th and March 11th. When we come back, we'll talk about some of the components of the IBD TIP Economic Optimism Index. But a lot of good action among growth stocks today. I put some money to work in my model portfolio, so we'll talk about that when we come back. You're listening to Breakout Investing on TFNN. We'll be right back, folks.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Thanks very much for tuning in. My name is Ken Shreve. Every Tuesday and Thursday, Breakout Investing airs on TFNN. Number to use if you want to give me a call is 877-927-6648. And, yeah, well, looks like we're seeing some additional strength in the market here. About 35 minutes left to go in Tuesday's session. The Dow now up 168 points, 1.3%. 13,128. The NASDAQ up, outperforming, actually right there in line with the S&P 500. Both indexes are up about 1.5, 1.6%. NASDAQ up 46 points, above 3,000 to 3,029, and the S&P 500 up a little more than 21 points to 1,392. Before we headed into the last break, just talking about, maybe a somewhat disappointing reading from the Investors Business Daily Tip Economic Optimism Index. It lost 1.9 points in March to 47.5, still in pessimistic territory. 3 components to that index. The 6-month economic outlook, that basically looks at how consumers feel about the economy's prospects in the next 6 months. That fell 1.4 points, 2.8% to 48.8. That's still in pessimistic territory. Personal financial outlook, still optimistic. That lost 3.2 points, or 5.6%, but it's at 54.2, so that's above that 50 threshold. And finally, confidence in federal economic policies. This is basically how people feel about how government economic policies are working. That fell just a little more than 1 point, 2.7% to 39.4. We also had retail sales data today. Pretty good number, better than expected. Not a big beat, but overall retail sales up 1.1%, excluding autos 0.9%. The estimate was for overall sales to be up 1%, with ex-autos up 0.6%. So good retail sales data. Today, let's check in on one of my favorite retail ETF here, the Spider S&P retail ETF. It is up 1.2% today, performing pretty much in line with the market to 61.40. This is an example of an ETF that is very extended in price. It's showing good supporting action at its 10-day moving average. You can see it staged a nice breakout over $55 back in January. Here was the breakout day right here, 55. Your swing point back over here in late October. This would have been not this past October, but the October before that in 2010. So a breakout over 55 for the XRT in January earlier this year, and very extended now. So this is an ETF that I wouldn't touch at current price levels. I'd wait for a market pullback. Maybe you can get it at the 20-day moving average right around 59, or maybe the 50-day at 56. But really a lot of charts out there that look like the XRT right now. So you always want to be careful to not chase names that have that are very extended and have been running for weeks and weeks and weeks without doing much in the way of consolidating. Frankly, that's the way the major averages look right now. They've been running higher for some time. They try to pull back for a day or two, and then buyers come back in. Volume has, hasn't been great. There's probably the best volume has been on the NASDAQ, and even that hasn't been all that impressive. So, a lot of technicians are, saying the market's going to pull back, but when you have the crowd slanting one way, looking for a pullback, the market's often going to do the opposite of what is expected. So, no one would be surprised to see a pullback. Not just for the XRT here, the Spider S&P retail ETF, but for the major averages as well. But just checking in on the major averages, we are gathering strength into the close today. So retail sales pretty good. Coming up Wednesday, not much in the way of economic data. We've got import-export prices for February. Thursday, weekly jobless claims. We've got the latest reading from the PPI also on Thursday. That's the Producer Price Index, which is basically measures inflation at the wholesale level. And also a reading on manufacturing Thursday, the Philadelphia Fed, which is a regional manufacturing survey. Coming up Friday, the latest look at consumer inflation. The Consumer Price Index will be out. We've also got, we'll see what the Michigan Sentiment Survey says, especially in light of what we heard from IBD earlier today with a little bit of a decline in consumer confidence. Checking out some earnings reports today, pretty quiet. Some scattered retailers scheduled to report. Let's take a look at Urban Outfitters. Boy, that stock popped higher in after hours last night. The bulls were happy, wondering when the turnaround is going to continue for this company, but that was short-lived. The stock today is down 6% to $27.68. Sales up 6% from a year ago to $610 million. Earnings down 23% from a year ago to 33 cents a share. So analysts and investors not sure that this company's turnaround is progressing the way they wanted it to. So when we come back, folks, we'll take a look at a lot of heavy volume breakouts today. Pretty compelling action in this market. We'll do that in about 4 minutes. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XA NKU, HUI, GLD, and dollar, the Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you. Welcome to Breakout Investing on TFNN. Before we went into break, talked about disappointing earnings from Urban Outfitters. Urban Outfitters was a real big leader back in, remember when that bull market started in March 2003. Retail stocks going gangbusters, and Urban was one of the big leaders of that bull market. And the company's kind of come upon hard times. Richard Haynes was co-founded the company in 1970. He's in as CEO now after Glenn Sank quit at the company. So Urban Outfitters also operates the Anthropologie and Free People chains, but not a great quarter for the company. I think investors were hoping for a bit more. Stock, like I said, under some pressure today. At last check, it was down about 6% to $27.73. Let's also take a look at Enterprise Software Company, another earnings report today, Ebix. And that stock is not doing too badly today, up $1.19, 5.2% to $23.88. It's basing now. Typically, when I buy a stock for my Ultimate Growth Stocks model portfolio, I like to buy heavy volume breakouts or stocks showing relative price strength in the market, and EBIX has definitely been showing relative price strength. Right now it's working on the right side of a base, so it still has more work to do to get to its recent high right around 26.27. So base building stocks showing good signs of accumulation today, but I think it's still early with this name. Good earnings report from the company. Earnings up 55% from a year ago to 44 cents a share. Sales up 25% to 44 million. So they only did 44 million in sales in the quarter. EBIX is not a huge company. It has a market cap of 862 million thereabouts, but pretty good fund sponsorship and a lot of positive qualities here. Return on equity pretty solid at 27%. But again, it's a software company, and good day for the stock today. All right, let's take a look at some movers today. Certainly a lot of them. I think the market action is definitely compelling today. Let's take a look at shares of VMware. Nice breakout for the maker of virtualization software. The base breakouts, as I've been saying in recent shows and in my newsletter, they really started happening in January. So that's when the first leaders came out. Leaders can come out 3 months after a follow-through. So you're looking December 20th, January, February, March 20th. We're still in that sweet spot where you can still look at breakouts here and get some leaders. But very bullish day for VMware. Good pop in volume in the stock. It is up 5% today to 104.98. The swing point was 101.98. So remember, you don't want to chase a stock when it moves 4 or 5% past the swing point. VMW still looks like it's in range here within that 4 to 5% threshold here. So I don't think you're chasing VMware by buying here. Good day for the stock. Let's move on. Take a look at F5 Networks, FFIV, and we'll see that this stock is a lot of 5% movers today. Amazing. F5 Networks up $6.51, 5.2% to $132.36. Nice breakout in this name as well. But let's take a look at a weekly chart. Weekly chart of F5 Networks. They pull this up here, and then we'll go to a call. And F5, where are you? There you are. What you have with F5 is not a breakout. What I've done here is I've put an arrow where the stock broke out of a big long base. Okay, so it broke out on this week right here, and then it rose, and then it came down to its 10-week moving average, okay, and it found support. So when a stock finds support at the 10-week moving average after a breakout, it's a good opportunity to add to a position. If you're going to buy for the first time, you just want to do maybe a little smaller position than what you're normally accustomed to. If your first buy is maybe 5% of your portfolio, your first buy at the 10-week moving average might be about maybe 2.5% or something like that. So it's always ideal to get a growth name like F5 coming out of a base. That's when you can take a 4 or 5% position, and then as it moves higher, find support. You can add a smaller amount and sort of average up. So but either way you look at it, compelling price action for F5 Networks. All right, we're going to, we had Deke from Clearwater wanted to talk about EBIX. Deke, if you want to call back and talk about that stock that we just went over, feel free to do so. So VMware, EBIX, F5, all good games. How about Allot Communications, ALLT? This is another interesting name. Big move for this name today. Stock is up, 14% almost, $2.53 to $20.66. The breakout for Allot was over $18.81. This is a perfect example of just a solid base here. Good solid base breakout. The base for Allot, when did that start here? It started all the way back in mid-December. Okay, so that's the mid-December start of the base right here. Move sideways, and then a good heavy volume breakout over 1880. So good day for Allot Communications. All right, I think we got Deke back from Clearwater. Deke, how are you today?
I'm fine. How are you?
I'm fine, thanks.
Yeah, I've been having my eye on EBEX for a while there, and I was looking at it on a weekly. What can you tell me about that?
EBEX on a weekly chart. Let's go ahead and pull up a weekly for EBEX. And, yeah, I mean, this is just definitely another example how a weekly chart's going to give you better perspective here. I think the weekly chart is bullish here, Zeke. And what I'm doing, let me just get the moving averages here. Bear with me for a second. For those of you watching on Tiger TV, all right. So what you have with EBEX on a weekly chart, you know, it's still a base that is taking shape, but I would call this a big old cup with handle pattern. Okay, it's forming the handle area right now, and you've got you've got a swing point. The high point in the handle is 2690. So it still has a ways to get there. But what you could do is draw. You could go to a daily chart and draw a little descending trend line from the top of the handle area, and you can see. Why don't I do that right now? Are you watching Tiger TV right now? Yep, gotcha. Okay, so I'm gonna go ahead and this is sort of a concept they teach at these seminars. Sometimes you don't have to wait for a stock to clear a handle area. So, all right. So what I'm going to do is I'm just going to get my annotating tool here. I'm not sure this is going to work, but let me just do my trend line here. Go up and I'm going to grab, see if this, okay, let's see here. Experimenting here, and it's not working very well. Bear with me here. Okay, let me grab this chart and see if you can see what I just annotated. You got that? You see that chart with the descending trend line there? So, I know some technical investors would be buying EBEX today, but bottom line, I think it's acting well. You've got good volume in the stock today, and Deke, as you know, it's being an owner of the stock, it's got pretty good growth prospects and a pretty solid fundamental picture as well. All right. So you're looking to, you own it now. You want to add to it. You're thinking about taking profits. What are your feelings about it?
I'm thinking about owning it because I thought it was a huge cupping handle. So I've been watching it for the last couple of weeks.
Well, it definitely is a cup with handle. What they would say. I mean, today would be what IBD would call an aggressive entry point. I mean, certainly volume is strong enough today. You could probably nibble here if you want to be really safe and make sure this market rally holds itself together. 2690 is still the high point in the handle is still a ways away. So. Right. I think right now with the volume, you could take a small position, keep a stop on it, and then if it breaks out over 2690, you can add a little more.
Okay. Thanks, man.
Okay, thank you.
Okay, bye.
All right. So that was Deke in Clearwater, and let me go ahead and. That's the first time I've tried annotating a chart in Tiger TV. I know that was a little rough, but let me go ahead and pull up that chart again. But yeah, I mean, Deke in a good technical setup. The swing point is 2690. Sometimes a stock, again, just to reiterate, can give you an earlier entry point, and EBEX did break out over a descending trend line today, so not a bad buying area at all. Let's also check in on GNC Holdings. I've been mentioning my Ultimate Growth Stocks model portfolio. GNC is a current holding. Was happy to hear good news from this company after the close. Last night, GNC Holdings is a specialty retailer of health and wellness products. They basically said, hey, remember that guidance we gave you when we recently reported earnings? Well, we're going to come in much better than that. They forecast better than expected sales, better than expected earnings. Right now, the stock is up 7.6% to $33.73, and I added to my position today. It's been a nice performer, recent new issue, technically very healthy, like the company's growth prospects. Seems to me to be a very well-run company. If you want to check out a trial to Ultimate Growth Stocks at TFNN, you can go to kenshreve.com. That's going to take you right over to my information page at tfnn.com. You can get a 30-day free trial, see what stocks I currently own in the model portfolio, and again, that's 30 days free for Ultimate Growth Stocks. So again, GNC Holdings is a current holding. Let's check in on InventSense. Boy, I mean, this is a volatile stock, but it is a new issue that is growing quickly. The company makes motion processing chips for Nintendo's Wii gaming system. Stock has been performing well. Shares of InventSense up another 4.5% today to $19.97. You had a nice little breakout in shares of InventSense. Let's get the swing point for you, which would be, what was that, about 1934, back over in this area right here. My main issue with InventSense is that it is, it is just such a volatile stock. I mean, it can move big either way, and even though I like to target growth stocks and in some cases aggressive growth stocks, I can only take so much volatility. So InventSense is under a lot of accumulation, but just yesterday, for example, the stock hit an intraday high of 20.08 and an intraday low of 16.75. So, big intraday price swings in this stock. That said, it is under accumulation. It is not doing anything wrong here, and it does have that good growth. So InventSense came public back in November at $8 a share. Now trading close to $20 a share. Growth prospects bright here. Another stock acting very well in this market. So again, even though we've seen some mild distribution in the major averages, you've got a lot of stocks out there flexing their muscle, and that is of equal importance. And so plenty of good stories out there. Let's take a look at Harley Davidson. Remember, it was just yesterday a Citi analyst came out and said that motorcycle sales in the first quarter were tracking pretty nicely for Harley Davidson. The stock is following through today after a nice move yesterday, up another 2.4% to 49.28. I think I have a weekly chart here for Harley Davidson. Let's take a look at a weekly here. There it is, Harley Davidson, and you can see that recent breakout over 46.88. Big long base here. Again, this is what the base is, the consolidation, and then a breakout over that prior high. So Harley Davidson, another stock acting very well. And how about some of these ancillary housing plays? Ethan Allen Interiors. A lot of bullish comments about the housing market, maybe recovering better than expected. A lot of positive analyst comments recently. Shares of Ethan Allen Interiors, small cap name here, but good day of outperformance, up 6.5% to 27.75. Good volume in the stock today. The breakout point, the swing point, was 26.80. 26.80. So remember, we're at 27.75 right now. Let me do some quick math. 27.75, 26.80, and it is about 3.5% above that swing point now. So on the verge of getting extended here, but still within buying range at 27.75. Not great top-line growth for Ethan Allen in recent quarters. I mean, not bad, 6%, 9%, something like that. But growth prospects are pretty bright for this company. Nice turnaround story going on. The company is expected to earn this year $1.04 for 2012. That, if it holds, will be up 79% versus the 58 cents a share it earned in 2011. Going out to 2013, next year, they're expected to earn $1.36, which would be up 31%. So pretty bright growth prospects here for Ethan Allen Interiors. Again, a small company, market cap of around $800 million or so. But a lot of movers in this market today. I think reasons to be encouraged. Home builders been running higher for a while, but a name like Ethan Allen Interiors, another way to play that bullishness in the housing market. So. All right, coming back for our final segment. Thanks very much for tuning in, folks. We'll be back in about 4 minutes, and we'll go over some more big movers today.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing as we head into the close here. You know, I mentioned earlier on volume was very light on the New York Stock Exchange and NASDAQ yesterday, and it was, you know, it's been tracking a little bit higher than Monday's levels, but very light volume on the NYSE yesterday, below average at 645 million shares. The good thing about the rally today is that volume is picking up the pace. At the top of the show, volume was tracking about 10% higher. Now volume on the New York Stock Exchange track about 30% higher. So NASDAQ, it's about 20%. So volume is picking up the pace. This all started after the Fed statement came out, and they've basically no change in monetary policy. They downplayed the economic recovery. They still see downside risks. Very interesting. I still am of that opinion in light of the pretty good economic data that we've seen. The Fed still thinks there's risk to this economy. But very positive performance for the market today. All right, let's go to Art in Orlando. I think the ticker symbol is PL. How you doing today, Art?
Fine, thank you, Ken. But it was a general question using Protective Life as an example.
Okay.
I'm a subscriber to IBD, and I just had a question. They show a company coming up, Protective Life in this case, with a buy point, but its fundamentals look kind of odd. I mean, return on equity 6%, annual EPS growth -4%, and well over 50% debt. Is this a kind of a stock that should be avoided?
Yeah, Protective Life is not a bad company by any means, but I tend to agree with you. I wouldn't say that its fundamental picture is terrible, but I think there are a lot of other companies out there that look a lot better in terms of recent earnings and sales growth, return on equity. Not to mention the fact that Protective Life, IBD gives it an accumulation distribution rating of C, which is kind of neutral in terms of institutional buying and institutional selling in recent weeks. What you have with Protective Life is a stock that technically is healthy. Don't really see anything wrong with the stock in terms of its chart, but I would tend to agree with you. Fundamentals, look at sales growth in recent quarters. The rate of growth has been decelerating from 27% to 17% to 12% in the latest quarter. So I never like to see decelerating sales growth. You're right, return on equity is fairly light at 8%. So yeah, fundamentally I agree. Very lukewarm at best.
Thank you.
Okay, thanks. All right, Art in Orlando asking about Protective Life. Good technicals with Protective Life, excellent relative price strength, but carries a heavy amount of debt, decelerating sales growth. I think there are many more better fish to fry out there. Let's just put it that way. All right, as we head into the close here, let's check in on the markets. I think we're still trading up near session highs. A very positive day for the market taking shape today. Right now, we've got the Dow well above 13,000 at 13,170, up better than 210 points, 1.6%. The NASDAQ up 53 points now to 3,037. That's good for a 1.8% gain. S&P 500 keeping pace with the NASDAQ, also up 1.8% to 1395. So, hey, good day for the market. I just been putting a little more money to work in the model portfolio. Can't say that I'm aggressively committing new capital, but if the market is telling me to buy certain stocks, I have to listen to the market. So I did that with 2 names today, and I also, like I said, added to GNC Holdings. And if you want to get a trial to Ultimate Growth Stocks, you can go to KenShreve.com. That takes you over to TFNN. You can get more information. Don't forget to follow me on Twitter as well. I don't give out my Twitter address very often, but you can follow me on Twitter at Ken Shreve. A reminder that I will be hosting the Tom O'Brien Show tomorrow between 4 and 5 Eastern, and the next edition of Breakout Investing will be Thursday from 3 to 4 Eastern. Have a great afternoon, everyone. Take care.